Okay, all right. Mother, father is going on. Banks are failing. USDC might be insolvent. You may not be able to redeem it. The stock market is crashing. The US dollar is going up and it's going down. Who knows what's going to happen? Artificial intelligence is going to put everybody out of work. What the father is going on? Oh, man. Okay, where do I start? Let's start with USDC because it's what everybody, every single Tether FUD that's out there always ends up making something else fail. Remember there was Tether FUD and then Terra and Luna fell. It just failed, dumped, and everyone lost their money. Bitfinex and Tether was FUDded again. And then what happened next? FTX died and everybody lost millions of dollars. Next, crypto gets FUDded. What ends up happening next? Silicon Valley Bank. Silicon Valley Bank. This is the bank, if you've never worked in tech, Silicon Valley Bank is like the platinum card. It's like the American Express black card. It's that exclusive club where there's two really big black bouncers that don't let you get into the club because you're not rich enough, you're not pretty enough, and you're not giving the bouncers $1,000 enough to get into this party. Is Silicon Valley Bank. They don't just open bank accounts for anybody, and now they closed bank accounts for everybody that was a customer. How does this all fit together? Where does this all... How do I get rich from this information? Okay, let's dissect it. You have to understand what's happening first so that you know where you sit in the big picture, in the landscape. So I'm going to define the landscape for you. I'm going to draw the landscape out for you, the terrain, the mountains, the valleys, the hills, the rivers, and everything. So that you can say, oh, I'm standing here. I should actually be standing there. And when I'm there, this is what I need to buy. This is what I need to own. This is what I need to short or long. So let's get into it. I guess we're going to start with USDC first. USDC is issued by Circle, which was backed by BlackRock. You know how much I hate BlackRock. BlackRock is run by the people, I'm not even going to say the word. I'm going to call them the she-leaders. No, that's not understandable. I'm going to call them the Litiers. Anyway, the Authriles and anyway, those guys that I'm not going to mention, because if I mention them, what's going to happen is the YouTube algorithm is going to make this video unviewable. So those guys run BlackRock, and BlackRock bought USDC because USDC was necessary to compete against Tether, because Tether was necessary to defeat, because Tether is where all the Bitcoiners end up buying and selling. And they ended up taking a significant portion of money out of the stock market, because instead of trading stocks, they would trade Bitcoin and Tether back and forth. And Wall Street didn't like that. And Wall Street is BlackRock, and it is owned by the Rothschilds and the Bill Beats of the world. So next thing that happens, you have the Fed. I was trying to figure out which angle to tie this in. There's multiple interconnected spider web things. Spider webs. Oh my God, this is so crazy. What I actually need to do is draw this on the whiteboard. But I'm not going to, because I don't have a whiteboard in here, because I never... Anyway. So, at the same time, on parallel, you have the Fed raising interest rates. Why would they raise interest rates? Well, if they raise interest rates, fewer people are going to borrow. And if fewer people borrow money, then the economy kind of slows down. The economy just says, well, do you want to buy something? Do you want to sell something? Not really. The economy is slowing down. I don't want to buy or sell anything. Oh, if you don't want to buy or sell anything, then I guess I'm not going to make a lot of money, and I'm not in this frenetic, fast-paced, yay, everything's going great, I'm just going to keep raising prices. So all the companies are going to be like, well, nothing's really happening. Let's just lower prices, is what the Fed wants to happen. What ends up actually happening, however, is that when the Fed raises interest rates, the economy does slow down. Nobody wants to borrow anything. But what part of the economy is based on borrowing and paying back and the currency flow that happens when people borrow and pay back? It's not my gas station, because I don't end up borrowing anything from a gas station. It's not my grocer. It's definitely not the local whorehouse. I don't end up borrowing anything from them, except maybe chlamydia. What? Banks slow down. So when banks slow down and nobody's borrowing, which if nobody borrows, that means the bank reserves are full, right? But that also means that nobody's paying back with interest. So the money ends up eventually drying out, even though no one's taking money from the bank. Oh, and also the way the US government works and the FDIC and the Fed works is that if a bank has lots of money that's being borrowed and back and forth, what the Fed will do is actually give the bank more money. They'll actually hand the bank money. So that's why it's called a fractional reserve. You have a tiny little bit of money on hand. And then as you need more money, you get more money from the Fed on a temporary loan. But since banks like Silicon Valley Bank, not only were they dealing with lower borrowing and repayments, so that the amount of money that they have flowing through the bank at any given time is much smaller. The liquidity starts drying up. Silicon Valley decides, let's just go artificial intelligence. If you go artificial intelligence, what does that mean? Well, I don't need Peter, I don't need James, I don't need Tom over there, and I certainly don't need Wanda. Let's just fire them all. By firing them all, what ends up happening is you have less capital demand, so the venture capitalists that made a ton of money building Netscape and Microsoft, well, I guess we don't have to deposit that much more money into the companies that we invested in, the startups that we invested in. So since we're not depositing that much more money because they don't need it, because now they're using artificial intelligence and they're not paying payrolls to their employees, let's not give any of the companies that we started to invest in any more money. And the companies that were startups backed by these venture capital firms with millions, if not billions of dollars, don't have any money either. So they don't deposit money into the bank because they don't need to deposit money into the bank because they don't have checks that they're giving out to any of their employees. If you've noticed, Microsoft did tons of layoffs. Google did tons of layoffs. Who else? Amazon did tons of layoffs. Hell, even the Chinese federal government did tons of layoffs, all because of artificial intelligence. So between nobody taking out loans and venture capitalists moving into artificial intelligence, meaning they don't have to hire anybody, nobody had to deposit money into Silicon Valley banks because they don't have checks that they're issuing to anybody. They've all been fired. All the employees that used to get checks have been fired. So the question is, why Silicon Valley Bank first? Well, obviously because of the artificial intelligence factor, number one. Number two, well, every bank is under stress now because liquidity is low, running across every single bank due to the Fed, but also because of Luna, Tether, and FTX. You put all those in common, and the weakest spot that gets hit by Tether and Luna, by FTX, because guys like BlockFi, guys like huge venture capital companies like BlockFi, not only did they invest in Tether and Luna, they invested in FTX. They had a ton of money on FTX, and all their profits, guess where their profits were? Silicon Valley Bank. BlockFi. You've heard of them. BlockFi runs almost everything in crypto. What does that mean? Now we get to, actually, do we? Do we? I think I need, there were a couple more points. Cash stops flowing. Okay, number JP Morgan Fed. Couple more points I want to touch on. Charlie Biello says, did Washington Mutual depositors lose money when the bank failed in 2008? No, all deposit accounts were transferred to JP Morgan Chase, who acquired WAMU for $1.9 billion, and no one lost any money that was deposited, and no FDIC insurance was used. This is true. This is true, except for the fact that with WAMU, when the bank failed, all they needed was money to pay off all the mortgages and keep all the depositor accounts and keep all the mortgages, all the car payments running and flowing. That's all they had to do. So this is like a 1 month stopgap. We just cover your last month and your next month's mortgage and your rent and your car payments and your insurance payments, and we're good. Now we've got this huge new customer base for nothing. We've got this huge new customer base of all employed people that actually have jobs that are gonna get paychecks next month. So all we have to do is tell all of our multi-billionaire, trillionaire investors, hey, let's just put a little bit more money in this month so that we can buy out Washington Mutual. And we'll be fine. So Charlie Bielo is inferring that JP Morgan can buy Silicon Valley Bank. Just like they bought WAMU back in 2008. No. Why not? Because here's the difference. With WAMU, Washington Mutual, all the people that had deposits and all the people that had took out loans, they were going to get a paycheck next month. Like I mentioned, they're going to get a paycheck next month. They're not going to go into default. They're not going to. Their bank accounts are still valuable. The only problem is that Washington Mutual itself didn't have enough money to cover all the mortgages and rents this month. That's all. All they had to do is get a capital injection, and instead of getting capital injection, they just failed, and JP Morgan had so much political clout. JP Morgan just stood in front of the Fed and said, hey, Fed guys, no, don't bail out Washington Mutual. Don't, please. I'm going to take you out to the whorehouse, and I'm going to take you out to Ibiza, and I'm going to give you a bunch of cocaine. Actually, the Boerbaus and the cocaine is I'm going to give you a bunch of that stuff, and I'm going to take you to Bajefbury, Epstein, land. Okay, so that's what the JP Morgan guys did to the Fed. And the Fed said, okay, we're not going to give Washington Mutual any money. We're going to just stand back and let you do your thing. So JP Morgan buys out Washington Mutual, and everything's fine, everyone's fine. And now JP Morgan is talking about buying out Silicon Valley Bank. If they do, it will be a major mistake. And I don't think they will. Unless it's the last acquisition of its kind. So we're going to have to keep tabs on that. Why? Because Washington Mutual had depositors that had paychecks coming in next month, but Silicon Valley Bank doesn't. Silicon Valley Bank has clients and account holders that are going to go broke because of artificial intelligence. They're going to go bankrupt. They just fired all their employees. So there are no more employees to make deposits next month. All the users, all the people that had bank accounts at Silicon Valley Bank, they're not going to make deposits next month. So why would you buy a bank that has no money and has no money coming in? Okay, so that's a major point. Here's another point. Exposure to Russian market says exposure to Silicon Valley Bank. I'm just going to show you this. I don't know if you can read this. Here it is. You might have to mirror this or see this video in a mirror. These are the guys that the biggest ones. Circle, Shopify, Juniper. Yeah, Juniper's huge. Juniper Network. Wow. Rocket Lab, iPoint, Payoneer. Oof. Payoneer. Ooh. Archer Aviation, QuantumScape. This is getting uglier and uglier. Oh, so how do I make money now? Now that, before I get to that, let me just say this. I thought that I would have about a year or two, maybe 3 at max, to get super, super rich and just disappear. Just buy my own island, bring all my friends, and just say, hey guys, we have enough money and we have enough cows now to eat beef the rest of, this is the cutoff. None of your friends get to come on this island. That's it. It's just friends and family, and we're just going to cut ourselves up from the rest of society. I thought I had 2 or 3 more years of being able to make money to do that. And hopefully I will, but I'm losing hope. Logically, I think, I'm actually surprised at how fast the system is melting down. I didn't foresee, and I'm disappointed in myself, I didn't foresee Silicon Valley Bank, an actual bank, seeing crypto exchanges like Huobi, FTX, seeing DeFi protocols like Terra and Luna collapse. That's understandable. But I didn't think 1 or 2 more chess moves down the line, to have foreseen Silicon Valley Bank itself defaulting. If Silicon Valley Bank defaults and goes broke, now what ends up happening is, and here's how everything accelerates, and here's how you can make money. You have to ask, what else are all the biggest tech companies using, like Silicon Valley Bank? Because remember, all the biggest tech companies, and there's thousands of them, right? Thousands. They're only being backed by 3 major venture capital firms. That's it. Andreessen, Horowitz, Sequoia, maybe Kleiner, Perkins, and a couple of the other smaller ones besides Sequoia and A16Z. What else are they using? So I asked that question, and some of the answers that I came up with was Cloudflare, Amazon Web Services. Amazon Web Services, basically anything that tech is using, thanks to artificial intelligence and thanks to interest rates going up, is all dead. It's all dead. But Amazon is so diversified that I wouldn't short it and expect to make as much money as something like shorting Silicon Valley Bank. Shorting Silicon Valley Bank was just a no-brainer. It's so simple. If I had just thought of that, well, crypto's dying and interest rates are going up. What's going to suffer? The obvious answer is a bank that caters to crypto. That's the obvious answer, and I just didn't think of that. So, anyways, guys, we need to pull our heads together. If you guys are, some of you guys are super geniuses. Some of you guys are like 160, 180, 200 IQ. Help me think of this stuff. Let's have these discussions. Don't just sit there in your own world thinking, well, I'm going to be fine, I'm going to be rich. No, you're not. Guys like us, we have to come together and think together and start stimulating, poking each other, prodding each other's IQ points, every single last half IQ point, to start squeezing out strategies. Because otherwise, I mean, even the smartest guys are going to be standing in soup lines, not soup lines, probably like beetle, cockroach, and cricket lines. No soup for you. So, the only company I could think of was, so far, Cloudflare. And there's Twilio? Twilio maybe? It's listed in, but Twilio isn't a bread and butter key choke point kind of company for most of these web companies. So what else is there? Cisco maybe, short Cisco. But Cisco's already not doing so well. Short Salesforce? Salesforce, yeah, but Salesforce is a client base far beyond technology. Even people in farming use Salesforce. Of these, which chart is the most overbought so that we can short it the most? We're just gonna have to look into it. But in the comments, give me ideas of companies that are publicly listed that we can short in my comments that happen to be heavily in the technology sector. Don't give me companies like, well, Bed Bath Beyond, let's just short that, because every tech company has furniture. Don't do that. Okay, give me actual companies that are strategic choke point companies. What I mean by that is, if this company disappears, then this technology company disappears. It's like what would have to disappear in your life for you to disappear? Well, water. Without water, you would disappear. That sort of thing. So if Cloudflare disappears, then all the websites on earth would disappear, and so would all the companies, that sort of thing. Give me companies like that that are absolutely necessary for the lifeblood of a tech company to continue. Even if they're not listed, especially, it doesn't. You know what would really help? If I had the cost sheet, the expenditures sheet of Andreessen Horowitz. I would love to see the bills. Who are the biggest bills coming from to Andreessen Horowitz and Sequoia? Who are they paying out the most? Because those companies are the ones that are going to go bankrupt. Comments. Let's put our heads together and start some massive shorts. Get rich, guys. Oh, and the conclusions. What we came up with? What we're going to short? Oh, man, I'm not sure if I'm going to tell you on YouTube, but I will definitely tell you guys if you join bitcoin-signals.org. Bitcoin-signals.org is where you get the precise results of all our research.